Hello friends, today we are going to talk about the fraud triangle. On hearing the word fraud, the first thing that comes to our mind is a list of scams, be it Ketan Parikh security scam 2001, home trade scam 2002, Satyam scam 2009, Shraddha cheat fund scam 2013, Speak Asia scam 2011, and the list goes on. Have we ever wondered what forces or motivate these people to commit fraud? In this video, we are going to talk about the major three factors that led to the fraud, collectively known as the fraud triangle. Before going to factors, let us see why fraud is being done. There are number of reasons why individuals commit financial statement fraud. Most commonly, financial statement fraud is used to make a company's earning appear better on the paper. Some of the more common reasons why people commit financial statement frauds include to obtain financing or favorable terms of existing financing, to avoid negative market perception, to encourage investment through sale of stock, to demonstrate compliance with financial covenants, to meet companies' goal and objective. This limited list of reasons shows that motivation for financial statement fraud does not always involve direct personal financial gains. Sometimes the cause of the fraudulent financials may be the situation pressure, opportunity, or ability to rationalize the fraudulent behavior to justify the crime in acceptable way. Now we will see what is fraud triangle. This is basically the term that has been coined by American sociologist Donald R. Cressy. These are the factors that increases the probability of the fraud significantly, and these factors are situational pressure, opportunity, potential rationalization. Collectively, these factors are also termed as a red flag. When we have any situation where the pressure, opportunity, or the potential rationalization appears, then at that situation, the possibility of the fraud increases significantly. So, what are these terms basically, and what are those situations? We will see in the upcoming slide. But financial situational pressure means the financial or corporate pressure forcing an individual to conduct fraud. Opportunity, arising of opportunity whereby one can commit fraud without fear of getting caught. Potential rationalization, fraud arising by way of thinking that enable people to maintain their moral code and avoid guilt while partaking in unethical behavior. Now we are going to look into the examples of finance fraud triangle. So we have already seen the three factors. So coming into the first factor being situational pressure. Under this scenario, the person feels the pinch of financial pressure, corporate pressure, budget pressure, or any other pressure that tempts him to do the fraud. Let us see the examples, it being sudden decrease in the revenue or market share of company or industry. In this scenario, person is tempted to do the fraud in order to rectify this fall in the revenue. Then we have unrealistic budget pressure that we can see in the COVID-19 situation where the financials of the almost all the industry is feeling the pinch of the COVID-19 and their share in the market, sales, revenue all has fallen down. So they are not going to meet the budget what they have earlier prepared and thought of. Financial pressure resulting from bonus plans that depend on short-term economic performance. Basically, the target what has been provided, all the bonus are based on the target. If the individual is able to achieve the target, he will get the bonus, and so that forces him or tempts him to go for the fraud. Then we have second area, opportunity. Under this scenario, what happens? The opportunity is created for the individual to commit the fraud. This opportunity can be in form of absence of the proper internal control, or it can be some opportunity where the judgmental call of the individual is required. So, like let us see what are the examples being absence of or lack of oversight by board of directors or audit committee, weak or non-existing internal control, unusual or complex transactions, financial estimate that require significant subjective judgment. So in this complex transaction, obviously, again we can see that the nature of the transaction is so complex that individual, even if the individual commits the fraud, it will be difficult to track it. And obviously already we talked about the subjective nature where it is totally on the individual how he may try to play with the numbers in case of estimation. Then third is potential rationalization. Under this scenario, the individual thinks that he is not committing the fraud. He is of the idea that whatever he is doing that is correct, and but actually if you look into the nature of the transactions, he is committing the fraud. So he is not aware of the fraud. Technically, if we say, if it will be of the nature where the person thinks that he is whatever he is conducting is morally correct, like inflating the revenue in year one and deflating in year two. Ultimately, they are making the net off, and there is no overstate or understate overall on overall basis. Then second is understating revenue to lower tax liability, altering the number to some extent to make the financials look better. So these are the some of the examples of the situations and situation under the fraud triangle. So with this we conclude our topic. With this I sum my topic today, and if you have any doubts query then do comment. I will respond to you at the earliest. And don't forget to like subscribe my channel for further updates. Thank you.